Hi everyone. Today we're going to discuss what goes into buying a property and earning rental income from it, the costs, the returns, and the processes. We're going to cover the process of finding and valuing a property another time because that is a big topic in itself. So, first off, for any investment, you need to determine the amount of money you would like to invest and then set up short and long term goals for this investment. In the case of a property, the short term goal would be to get regular income through rent. The rate of return that this rent provides you is also known as the yield. In our case, we would like the yield to be around or higher than the current rate of inflation. The long term goal, of course, for any real estate investment is asset appreciation. In today's video, we will be focusing on the short-term goal of earning rental income from a property. So let's have a look at the different types of assets you could invest in to start getting a rental income. These could be residential assets, which now in India tend to be mostly flats in apartment complexes, or even something like a second home, a bungalow, or a row house. You could also invest in commercial assets, which tend to include large office parks or even retail stores and industrial galas. To keep things simple, we're going to set aside all the other types of real estate investments such as land, warehousing, industrial, because they aren't as straightforward for beginner investors. So there are certain costs associated with purchasing and renting out a property. These can either be fixed costs that you have to pay at the time of purchase or when you rent the property out, or they are recurring or variable costs that you have to pay regularly as a property owner. Let's talk about these fixed costs. The first one is stamp duty and registration. All sale agreements and rental agreements, which are also known as leave and license agreements, have to be registered at the local registrar wherever you are. Stamp duty and registration will have to be paid both on the purchase agreement for the property and the rental agreement that you sign with your prospective tenant. For any purchase or rental agreement, you must register it with the authorities to have an official record of the transaction. The stamp duty and registration charges depend on the state or city you live in and are usually calculated on the transaction amount. For example, in Maharashtra, the stamp duty has been reduced from 5% to 2% until 31st December 2020 and then 3% till 31st March 2021 as an incentive for buyers. Another fixed cost is brokerage. If you have gone through a broker or real estate agent either to purchase the property or to find a tenant to rent your property out, you will have to pay brokerage. Now, the amount can really vary depending on the market you're in, the size of the transaction, and the broker you are working with. This can be 1 to 3% of the transaction value for a property sale or purchase, and 1 to 3 months of the rent amount for a rental agreement. As a property owner, you have to pay property tax. The amount is assessed by the municipal corporation of the area in which you live, and it's usually billed regularly per quarter. Apart from this, you will also have to pay maintenance. Building societies, either for residential or commercial buildings, charge property owners a regular maintenance amount to cover the common amenities of the building and maintain the building's infrastructure. Now, let's talk about the rental income and returns that you can get on your investment. Typically, rental or leave and license agreements are signed for a specific amount of time. Within these agreements, you can also have specialized clauses such as a lock-in period during which neither the tenant or landlord is allowed to terminate this agreement. You can also have price escalations built in, which ensures that the rental amount increases after certain amounts of time. You need to make sure that all these terms are clearly laid out in the registered leave and license agreement that you sign with your tenant. Now, let's have a look at the different types of returns you can get depending on the kind of property you invest in. For any property, the yield is the percentage return that you're getting from your rent on the total investment that you have made in the property. To calculate the yield, you take your annual rental earnings, subtract from it your annualized recurring costs associated with being a property owner, and divide that by the total landed cost of the property, which would include all the fixed costs such as stamp duty, registration, and brokerage. Rental returns for residential properties across India have historically been quite low, ranging from 2 to 5% depending on the area in which you live. This is way lower than the current rate of inflation. Further, on an average, the data suggests that the rental yield actually decreases the more expensive a property is per square foot. Now, returns in residential real estate have mostly been through appreciation gains over time, which are not guaranteed. This asset appreciation could depend on a lot of factors, which include the location of the property, the local market, the type of property you're buying, and even the time of purchase. Right now, given the way the market is working, I don't see a short term appreciation in residential real estate rates. In my opinion, one should buy residential real estate only for personal use. In comparison, the rental yields for commercial real estate in India are much higher, coming in at about 8 to 10%. These higher yields in the commercial real estate sector in India have actually attracted the attention of funds and institutional investors from across the globe. These higher yields in commercial real estate have also led to the best assets being consolidated and listed on the stock exchange in the form of REITs or real estate investment trusts. However, the ticket size for commercial real estate assets is also usually higher because office units in large AAA commercial properties tend to be larger to accommodate the needs of their tenants. So, if you're looking to make a smaller investment in commercial real estate, your best bet may still be looking into real estate investment trusts, which I covered in a previous video. Ideally, and especially if you are just starting out, you should look to invest in real estate with your own funds. However, for the sake of knowledge, I want to go over two popular financing options used by real estate investors. You can take a loan to purchase a property, but usually it's very hard, especially in residential real estate, for your rental income to cover the EMI of the loan. Even though home loan rates in India are close to an all-time low, the leading private banks are offering home loan rates of between 6.9 to 8.5%, which is way higher than the yield you could expect from a residential property. Depending on the property you're looking at, you could utilize government subsidy schemes on interest such as the PM Awas Yojana, which would reduce your interest burden to something around 5%. Here, the rental amount could pay for the interest portion of the loan, which would be tough to do in most other cases. If you are able to find such a deal where you could balance the interest portion of a home loan with the rental income you receive from the property, I would advise you to go ahead. Now, another option in terms of financing that I would like to discuss is rent discounting. Lease rent discounting is a loan that the bank gives you against the regular rental payments that you receive from your property. Depending on the length of your agreement, you could get a significant portion of the total value as a loan from the bank against the regular rental income that you are receiving from the tenant. It is, however, important to note that with something like rent discounting, you have to be careful of the leverage ratio. That is, the total amount of loan that you have taken versus the value of your property and the rental contract that you have with your tenant. Alright everyone, thank you for listening, and I hope that you understood the basic process of investing and starting a passive income from real estate. Since this is a large topic and I wanted to keep things simple, we will discuss the process of valuing and finding a property for long-term appreciation in another video. So keep your eyes out for that, and please subscribe to this channel for more information on real estate and business in India. Thank you.